Taiwan looks quite weak, around 0.9% gone there.
The wage numbers are running very hot. We should also observe that the number of job openings, while coming down, is still roughly 2 to 3 times what the norm has been.
Inflation print has come down, so there are signs of moderating inflationary pressures.
Any loan which has a residual overdue of less than 365 days cannot be securitized.
About 87 points gone on the Nifty.
Won't be surprised if we stay in this kind of a market, a bit of a range-bound market with volatility.
Depending on how the stocks will perform, our business will perform, we will keep evaluating this option at the board level.
So Morgan Stanley has gone ahead and further raised the target price, multiples and earning estimates across all the PSU bank stocks.
Sheer size and numbers that we are seeing in terms of the growth of the Indian investor base is something quite remarkable.
Monetary Policy Committee is widely expected to hike rates by 35 basis points in this policy.
A lot of the production has gone into 2023. So that's when, the momentum has slowed down towards the end of the year.
This is a big deal, and I think this basically launches us into the global arena.
84 points cut on the Nifty is what we are seeing, but there's a tad bit recovery from the lows.
Well, that was the day so far. You're with us here on Closing Bell. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi, good afternoon.
Hi.
The lows yesterday and today are almost similar. 18,590, 570, in that range. By the way, today at about 1 o'clock, right before 1 o'clock, the market did break yesterday's low, but it's been in a holding pattern ever since for the last at least 1.5 odd hours or so. Two things actually. One, mid caps and small caps, which have been, in a way, the stronger part of the market that is under pressure. And you've got the mid-cap index down about 0.7%. If we end lower in this fashion on the mid-cap index, it would be the only second instance in the last 11 days that the mid-cap index would be down on a day-on-day basis. And the small-cap index is doing a little better. It's down lesser by about 1/3% or so as compared to mid-caps. Two ends of the extreme. One is IT services, which is seeing selling pressure, but that's from the word go. It's almost as if, the market picks and chooses the day it's going to respond to a big move overnight in US. So yields went up. At least the 10-year benchmark went up 10 basis points, and you got the IT index down 1.8%. But can you make that argument every day? You can't. We've had instances of big jumps and nothing on the IT index. But today is not one of those days. Today you're seeing an impact. On the other end, you got the PSU banks, which are actually doing much better. Lots of names. We'll talk more about them. There is, of course, Morgan Note as well, which has raised price targets across PSU banks and what they make of the pack. That index is up about 1% or so. But, 80 points lower on the Nifty, almost in a holding pattern for the last couple of hours or so. Reema, hi.
Hi, the story is global-facing sectors, IT and metals under pressure. Nifty IT index down 1.7%, the Nifty metal index down 1%, while the inward-facing, domestic demand-driven stories, whether it's on the consumption side or the PSU banking space, that's a sector which is outperforming. But there's also an interesting note from ICICI Securities, which I'd like to highlight, where they say equities are now entering high optimism zone. So they've done some historical analysis over the last 20 years. And they're saying the expected one-year returns for Nifty 50 have been subpar whenever the valuations touch 20 to 22 times range. So as I said, they've analyzed the historical performance over the last 2 decades, and that tells us that the annual returns for the Nifty just stand at an average of 3% whenever the Nifty PE is in a range of 20 to 22 times. This compares with an average return of 12% that the Indian equities have produced over the long terms from 1990. So basically, high valuation, whenever the equities trade at high valuations, typically the next year tends to have subpar or low returns. They've also analyzed it a little further. They're saying that the Nifty 50 has given you positive returns in 66 instances and negative return in the balance 34 instances over that one-year period, whenever that valuation ranges 20-22 times. Whenever it's a positive return, whenever you've had a positive year, the average return has been close to 9%. But whenever you've had a negative return, the average return is close to about 13%. So all we're trying to say, and that note says, is that valuations are at the higher end, and that does set the stage for subpar returns. But according to them, there are also reasonable prospects of moderate positive returns next year because of earnings expansion is likely to continue and the quantitative tightening cycle is likely to ease in the coming year. So just want to put that in context about valuations and the future of equities and what history has to tell us, Nigel.
Well, that's right. We got a couple of big events that are coming up, so it'll be interesting to see how we trade for the next few days. But the sense you get is there is some support at around 18,500 to around 18,550. And today's low was at around 18,578. So that'll be important stop loss at least for today. The premium at around that 18,600 put, well, it's around 60 rupees. So there appears there is some writing at these levels. So it gives you a sense again that we are in that vicinity of around 18,540 odd in terms of a support zone. On the upside though, the 18,800 call, the total open interest out there is more than 1.1 crore shares. And the premium out there is around 31 rupees. For the last few days, we have been seeing writing at this level. And going by the open interest, the bears, they seem to believe that 18,850 to around 18,888, that's the recent high. That'll be the congestion zone out there. For me though, today's session is a little bit disappointing. And I say that not because of the Nifty. The Nifty can fall 80, 100 points or par for the course. But the breadth of the market has been deteriorating all through the session. So at one point of time for the first couple of hours, you had the mid-cap and the small-cap indices that were doing a relative outperformance. However, if you look at the Nifty, the mid-cap index and the small-cap indices, now you'll see that, in fact, those two indices, now they're underperforming. So that's a bit of a worry. And the advanced decline ratio as well. We started off with way more number of stocks advancing than declining. Now the number of stocks that are advancing are down to around 1,100, while the number of stocks declining are gone up to around 1,600 odd. So the breadth of the market in favor of the declines hopefully is just a one-off day and we return back to the winning ways in terms of the broader markets, but time will tell on that front. Rima, back to you.
Okay, let's tell our viewers then what we've lined up on the show today. Steel stocks are under pressure. What's dragging the pack? A quick explainer coming up. Jammu and Kashmir Bank is surging on the back of bullish commentary from the management. Key excerpts from our conversation on the show. 2023 is shaping very well for the cement sector. That's the word coming in from Shri Digvijay Cements in Anil Singhvi. The stock has rallied almost 8% today. Key excerpts from our conversation on Closing Bell today. We'll track the market technicals with Jay Bala of cashthechaos.com. We'll also discuss his top portfolio bets and the way forward for the market with our alpha manager for the day, Harish Krishnan of Kotak AMC.
Well, what should you be doing this last hour of trade? That's the question. And let's, as always, bring in Mitesh Thakkar to answer that. Mitesh, hi, good afternoon. Will we see a recovery from here, or do you think it'll test these levels? I mean, the lows that we've hit earlier today and maybe a little lower from here.
Good afternoon, Prashant. See, I think figuring that out is slightly more difficult in the sense that, this looks like to be a phase when the market is contracting and going through a pullback. So it's basically consolidation. Since it's not a reversal, my sense that I think the worst we are looking at is possibly that range of 18,450, 18,500. But this is not the time to hold long positions. You have to wait it out. I think let the consolidation play out. The moving averages will catch up. The indicators will come out of the overbought territories. I think, it might take a couple of days of time frame as a process to be completed. So I think for the timing, I think on the index, as long as 18,450, 500 is not breaking, stay positive. Declines closer to 18,500 would be buying opportunities as well because the overall trend is still on the upside. So that's the way we are approaching, and we're trading with more long buys on the stock specific sides as well. I have a buy on Adani Enterprises. I think that's breaking out after a good consolidation for last many days. Recommend a buy here with a stop just below levels of 39.80 and a target of 41.25 on the upside. And the other one is a cash stock which has come on radar after a long time, is Reddington, making a fresh high after a consolidation of 6-7 days. So that's a buy with a stop below levels of 180 for targets of 195.
Okay, all right. Well, just take a look at that stock. Reddington flying away as we speak. And, Mitesh says that one's good for more. So, Mitesh, we'll come back to you, but that one has moved to the high point of the day. I think we have a fundamental guest as well that's joining in. Hemang Jani, I think, is joining in. Hi, Hemang. Good afternoon. Well, we want to talk about steel stocks. But since Mitesh briefly mentioned Reddington, do you have a view on the stock? I think for the first half of the year, the EPS is close to around 9 rupees odd. Maybe by the end of this year, I think Bloomberg consensus is working with around 18, 19 rupees. So it's available at around 10 times. What's your sense on business?
So Nigel, Reddington we do not cover, so don't have a view on that.
Okay, got it. All right, Hemang, We'll set that aside for the time being and we'll go with Mitesh's technical call. But let's talk about steel stocks, and I'll come to ask you about these stocks. Well, today the metal index is down by close to around 2%. A few reasons could have played out. One is global markets in a bit of a tizzy. You have some bit of profit taking on the metal stocks after the kind of run that we saw yesterday, and there are fears back on the table that maybe the Fed will continue to remain aggressive. Those are the global factors. But domestically, steel prices have been pulled back for the month of January. And Steelmint reports, they have said that HRC as well as CRC prices, they have been pulled back by around 33,000 to around 4,800 rupees per ton for the month of December. Now, post the correction, HRC prices are at around 54,000 rupees per ton. However, the rebar prices, they have not been pulled back. But that gives you a sense that infrastructure projects on ground, they're picking up momentum because that's what rebars are used for. Phillip Capital, they're saying this is par for the course. They're expected that there's going to be a cut because as it is, domestic pricing was at a premium of around 8 to around 15% in comparison to steel that was coming in from Korea or from China. So that's why they had called for this. Even post this price cut, in fact, there'll still be a bit of a premium, though the premium has come down now. From China, if you're importing steel, well, that'll come down roughly to around 2%. And if you're importing it from Korea as well, that'll come down to around 7 to around 8%. So this was warranted. This could help further offtake from here on. Even though export duty had been withdrawn, they can't export because the realizations in the domestic market were far better. So put all this together, it seems it's a logical way to go, cut some prices and push through some volumes. Hemang, what do you make of these steel stocks? Some of them have seen a big rally from the days, from the recent lows. How would you approach them?
So, good afternoon, Nigel. I think there are 2 or 3 things that I would like to share. One is that the price cut that we have seen in certain categories, that is in line with expectations. So that is not something that the market was not prepared for. Secondly, the rollback of the export duty, which was imposed last year, that is definitely, big positive for some of the domestic companies like NMDC, JSPL. Also, Nigel, when we look at the data and the news flow around China, where there is a strong case of open up when we are seeing upgrades by many prominent brokerage houses, that is also helping the sentiment towards some of these commodity companies. So I think from a short-term perspective, definitely we will have a positive view on the names like NMDC and JSPL. However, given that we have a data-heavy month in US, it would be difficult to take a call beyond, let's say, short-term.
Okay, all right, got that. Well, Hemang, let's talk about domestic materials. Then we talk about the cement space. But for the time being, earlier today, we were joined by the management of Sri Digvijay Cements, Mr. Anil Singhvi, and as well as HDFC Securities, Rajesh Ravi. Both of them sounded very bullish on the way forward for the entire industry. In fact, Sri Digvijay Cement is rallying in trade even right now. Let's hear them out and then we'll get Hemang's view.
Going forward, I think the EBITDA per ton will be much better than what we did because it was high coal prices, demand being low, monsoon months, everything what could go wrong went wrong during September month. So we are out of the perfect storm. Definitely, I believe that the industry will go through some consolidation. It won't be in the hurry, as I mentioned to you. It may take time. Smaller assets, yes, they may go through because you don't require much of both work to be done and much of the money to be spent on those. But definitely 23. So let me not put 1 or 2 quarters, but 2023, the full calendar year, you'll see a lot of consolidation happen. Going forward, I think the EBITDA per ton will be much better than what we did because it was high coal prices, demand being low, monsoon months, everything what could go wrong went wrong during September month. So we are out of the perfect storm. Definitely, I believe that the industry will go through some consolidation. It won't be in the hurry, as I mentioned to you. It may take time. Smaller assets, yes, they may go through because you don't require much of both work to be done and much of the money to be spent on those. But definitely 23. So let me not put 1 or 2 quarters, but 2023, the full calendar year, you'll see a lot of consolidation happening in cement industry.
Okay, cement's having a good day led by Sri Digvijay Cement up 7%, but Ambuja Cement is up 1.7%. Heidelberg also up a similar amount, and Sri Cement has now moved to the high point of the day. Hemang, anything that you like in the cement pack? If yes, which one looks most attractive to you?
Overall, we have a positive view on the cement sector, and we think that post this festive season, the pickup in the activity, both in the private sector space as well as from the government side, there is a view that the overall dispatch and the pickup will be very strong. and you've also seen a little bit of cool off in the pet coke prices. So within cement, mid cap companies that we like are JK Cement, JK Lakshmi, and Dalmia Bharat. And in terms of large cap, we prefer Ultratech, and we think that from a, let's say, next 2 quarters to 1 year period, I think these companies should deliver very good returns, from a positional trading perspective.
Hemang, hi. You have a view on PSU banks which continue to do well, and which ones in particular?
So very positive view. I think there is going to be an extension of the re-rating that we have seen in the last 2 quarters. And we think that, given most of the parameters, be it, the loan growth, the margin picture, and the fact that, there is going to be some sort of a repricing of the loan now, which will have a slightly better impact on the margins going forward, definitely bodes well for the PSU banks. And still they are quoting at 0.6, 0.7 time price to book with a much better growth visibility ahead. So within the PSU banks, we still like Canara Bank, we like Bank of Baroda. I think both of them are, very good. Also the smaller PSU bank, Indian Bank, we had a look at that, and that is also looking quite positive, from a smaller PSU bank category.
Okay, today the banks are clearly ruling the roost. Even IDBI Bank is up 3.7%. UCO Bank has gained close to about 3.2%. Union Bank up 5%. Time to get into a very short break. Hemang, do stay on. We'll also discuss, some of the portfolio bets and the way forward for the markets with our Alpha Manager for the day, Harish Krishnan of Kotak AMC.
CNBC-TV18, celebrating 23 years of business leadership.
Invest once and enjoy guaranteed maturity with life cover with LIC's Dhan Varsha, a single premium plan for your family's security and prosperity.
Everything we do has an impact on the climate. But how can we transform that from a negative into a positive?
The whole essence of creating Petronas was really to create a positive social impact.
I've been out to the rainforest and seen some of the work they're doing there. We're going in the right direction.
It's about working together to deliver sustainable impact.
पुत्र वीर कमाल दिखा अपना कभी टेबल बन जाता है तो कभी अलमारी वीर MDF आम प्लाईवुड से ज्यादा मजबूत ज्यादा किफायती दिखे चकाचक टिके टकाटक
Do we have to wait years for a cure?
Hey mommy, can we go make some pancakes?
Yeah, let's go. Or are we smarter than that?
Mr. B, एक नहीं दो नहीं तीन नहीं काम कर सकूं चार भी. So show me what you can do, bro. नाम है मेरा Mr. Can Be Done. क्या तुमने पूछा what I can do? एक क्या 10 क्या 100 क्या bro? I can do a whole lot more. Bank account से लेकर business loan, FD, RD, edu loan, UPI तक. Mortgage, shopping, faster get line, bro. You are in luck. कैसे bro? How? This is Canara Bank AI1.
आपके सपने हमारे अपने.
झाके रे झाके झरोके से झाके देख के दंग है छोटे बड़े सारे झाके रे झाके फ्यूचर को ये ताके तरक्की को टुक टुक हर कोई ताके झाके
Engineering brighter futures with smarter steels. ArcelorMittal, Nippon Steel India. Smarter steels, brighter futures.
CNBC-TV18, celebrating 23 years of business leadership.
Welcome back. State Bank of India has slipped to the low point of the day, so that's currently under pressure. But on the flip side, you can see gains in Nestle, M&M. These are stocks which are punching higher as we speak. Another pack which has been moving well off late are the NBFC stocks. So pull up something like an Aditya Birla Capital, AB Capital. Pull up a 3-month chart and you would see the stock price was languishing near 100 rupees and now it's shot up to 150. And this up move in the month, in the last fortnight has come in on very large volumes. Mahindra Finance, M&M Financial also reported very strong November growth number, 75% growth in disbursements on a year-on-year basis. Hemang, is this a space which is looking good? The stocks have done well, but can we expect the good run to sustain from here on? And particularly for Aditya Birla Capital, what's happening? Is it the Ms. Vishakha Mulye impact?
Yeah, so I think NBFCs have really come back into the limelight, mainly because you're seeing that a large part of this interest rate hike is now behind us, and the business updates from most of the companies is pretty good without any surprises on the credit cost front. And there is a sense that the valuation at which some of these NBFCs are quoting at, for example, Mahindra Finance is still at about 1.9 price to book. L&T Finance is at 1 time, and Aditya Birla Capital would be somewhere close to about 2, with a very strong traction building in. So I think there is a much larger, growth over here in terms of valuation re-rating as well as business growth. So we do like Mahindra Finance and also L&T Finance, where there is a larger valuation comfort. And AB Capital, yes, I think the management change with a much better balance sheet quality. I think people are getting a little more excited about that one.
Okay, all right. Hemang, I wanted to ask you about a couple of other names, but let's just hear out the management of J&K Bank. The stock is up 30% in the last 1 month or so, and today as well it's up closer around 4%. Earlier today we caught up with Mr. Baldev Prakash, MD and CEO, and he sounded very, very optimistic. He gave us some fixed guidance as well. We'll hear him out, and then I wanted your view on this bank particularly.
The bank is looking at around 16 to 18%, and in the best case scenario around 20%. And the focus, of course, remains in J&K, and Ladakh is mainly on the retail growth. We have a very good franchise in the shape of government employees and the police personnel. There we have already provided them the facility of digital loans. We had this quite elevated NPA book of around 9%, as you know, in the last few quarters. But the team is working now very hard on NPA, and we have around 7.5% of NPA as of now. And the way we are working, I'm confident that we should be able to bring this NPA book to around 6% by the end of the financial year. ROE right now is around 14%, and the target for us is to take it to around 15%. And ROA we are at around 0.75%. The target is to take it to around 1%.
Hemang, any view on this bank, particularly J&K Bank? They're talking about better return ratios, ROE, ROA as well. Loan growth of around anything close to around 18%. Asset quality improves from year on. Margins holding at around 4%. What's your take on it?
I think, Nigel, it's a very small bank, about 5,200 crore kind of a market cap. And if you see YOY, there is a massive turnaround, as I can see that from 161 crore of profit, the profit went up to 240 crore. And now that, the entire this J&K with the, union government taking over, making that special, law there, there is a sense that the tourism and the economic activity can pick up. And from that perspective, some appetite would be there for people to go out for cheap banks. So I think it is fitting into that theme, but we do not cover it, so I don't have a specific reco there.
Okay, Hemang, thank you very much. Great speaking with you. Appreciate you joining in with that perspective. Thanks indeed. Our alpha manager of the day is with us. Harish Krishnan is joining us. He's Executive Vice President and Senior Equity Fund Manager at Kotak Mahindra Asset Management Company. Harish, good to have you with us here. Thank you very much. You know, you run the Balanced Advantage scheme as well, fund as well at Kotak. What is the equity exposure in that now?
Right, Prashant. So yes, as far as our asset allocation product is concerned, the Kotak Balanced Advantage Fund, currently we are at about 45% in net equity. Just to provide a broader perspective as to where we moved over the course of the last few years, we varied from about 20% to 80%. The same time, around September of last year, we were at 31% invested in equities. Sometime in May of this year, we've taken it up to 54%. And in the last 4-5 months, given the strong comeback in equities, we have toned down our exposure from 54% to about 45%. So that's been the broad range of equities as we speak now.
And when was, you said 20 was the lower bound. When was 20? When?
Right. So that was sometime in 2018 when we were at about 25%.
Okay. 20, okay. All right. Fair enough. Now, I was reading an article where I think it referenced S. Narain of ICICI Pru, and now in the Balanced Advantage Fund balance scheme that they run, they're at 10-year lows in terms of equity exposure. So just thought I should ask you that. I mean, your exposure goes up from here if the market keeps going higher or lower?
No, so we are a counter-cyclical balanced advantage fund as well. So like I said, last year we were at about 30% in September of 2021, when there was, gay abandon and everybody was talking up on equity markets and there was a lot of fraud. And as markets corrected, we increased our exposure to 54%. Currently, I mean, if I were to contextualize how we positioned now compared to how it was, say, 18,000 levels last year and what the key differences are, clearly valuations is one factor that we consider, which is moderated a bit. Yes, on a standalone basis, still India is trading at elevated multiples from a 20-25 year kind of a history, and it still stands up even more, when we look at on a relative context, where across the world markets are significantly more cheaper compared to where India is. But it's on the other parameters that I think a lot of froth has gone away from. So if you look at, say, for example, the breadth of the overall market, or if you look at the number of stocks making lifetime highs, or the number of huge divergence that we'd seen in small and micro caps over large caps, they were at almost record highs in 2021 second half. That has moderated quite substantially as we speak now. So therefore, a lot of froth as far as sentiment has kind of dwindled down. But having said that, clearly valuations are punchy, which means that therefore we are below the neutral recommendation for equities, and therefore, which is why we are currently at about 45% in equities.
Got that. Well explained. Harish, revenge consumption in stocks like retail, travel, auto, entertainment all skyrocketed in 2020. But it was partly boosted on account of the COVID-related savings that people had of 2020 as well as 2021. But now that savings has actually been spent in 2022, and now inflation has started to pinch. So do you not get the sense that consumption of these, in these sectors like auto or retail, travel, is going to slow down in 2023?
So if you look at consumption, there are the two buckets, right? You've got the bottom of pyramid consumption and the, you can say, aspirational urban-led consumption or consumer discretionary. We are a lot more circumspect on the bottom of the pyramid consumption, primarily because of the fact that in our assessment, COVID has definitely impacted the income profile and the savings profiles of the bottom of the pyramid quite significantly. And therefore, there is a impact in terms of their overall consumption trends. Your point is well taken that there has been a significant base effect, the fact that revenge consumption came out in full swing in the whole of 2022, where we didn't have any of those issues. But when we look at the year ahead, I think it's also important to understand that there is, especially in urban India, there has been reasonable amount of hiring. on the formal side, be it in terms of the IT sector or be it in terms of other services sector. Manufacturing is doing quite well. Real estate so far has picked up quite well. So the overall wealth effect continues to remain reasonably buoyant. There is a new addition of employment pool into the formal workforce in urban India. So I think it's a confluence of all of these that makes us slightly more positive on consumer discretionary, especially which are more focused towards urban India compared to the bottom of pyramid consumption. But yes, the big move in terms of the revenge consumption clearly is not going to come through, in the future.
Okay, all right. Hi, Harish. Good afternoon. Nigel on this side. Well, how do you play these consumer discretionary plays then? There's auto in there. There could be retail in there. Real estate, you've already mentioned you're fairly positive out there. So which are the themes you're looking at playing?
Right. So the way we look at it, Nigel, is that over, say, a 20-year period, I'm just giving you an example. For example, auto sector. Auto sector profit pools have varied from 0.5% to 10% of total profits. And currently we are close to about, say, 2.5%, 3%. So if you look at consumer discretionary categories like auto, real estate, media, retailing, a lot of these consumer discretionary are actually significantly below in terms of their profit pool contribution to the overall profits. And we think that therefore, those are the areas where we still have reasonable exposure. But yes, we were a lot more positive getting into 2022 with a significant move in many of these names. We have pared down some exposure in those names, but we continue to have an overweight stance on many of these sectors, including real estate, including auto, including retailing plays, as well as in terms of travel.
The number for real estate as a profits as a percentage of total right now, Harish? Sorry.
Right. So real estate is a very small sector, Prashant. Both in terms of profits as well as in terms of sales. It's generally been about, as you would be aware, bulk of real estate sector stocks got listed only post 2007. So in that small time frame, we've got a very limited window, but it's been a very small percentage, less than about 2% of overall profits. That's been the range that they've been there. And, it's pretty much there.
Harish, if you have to further bring down your equity exposure in your fund, which is the sectors you would look to exit out of in your portfolio?
Right. So I think incrementally we are getting a bit worried on banking in the sense that we have had the best of everything that's played out in terms of banking. They've had very good credit growth. There's been expansion in NIMs. There's been buoyancy in fee income. And best of all, there have been pretty much very low credit cost that have come through. So it's been a crescent of a whole bunch of variables that have kind of helped the banking space. And banking stocks have done quite well. And therefore, I think at the margin, we would be looking to pare down some of our exposure out there, even though, in the bigger scheme of things, we continue to have a reasonably large weight out there. The other sector that we continue to remain watchful of is, like I said, on the consumer side, especially on the bottom of the pyramid, our exposure over there, we'll further calibrate, or we're looking to further calibrate down as we speak. And that's the other space that we would be watchful of. Conversely, where we are looking to increase exposure would be in sectors which are consumers of energy. So be it gas, be it tiles, building products, building materials, those are the areas which got significantly impacted during the energy crisis of last year. And we do think that, consumers of energy will get some benefit as we go through in the next year. And that's the space that we're looking to increase. Similarly, IT is another space which got the rough end in 2022, and we're cutting down our underweights over there marginally as we speak. So that's broadly where the incremental kind of pulls and pressures have been as far as the portfolio is concerned.
Okay, all right. Harish, from the banking and financial space, which is a consensus theme, and you're sounding that how much of it, the good news are already in the price. If you were to scale down exposure out there, which part will it be? You have exposure to private banks. You had exposure to a PSU bank like SBI, at least, is what your fund details were showing at least a couple of months ago. And also you had NBFCs, the largest ones, Bajaj Finance and the likes. Right. So which segment would you be looking to taper down exposure?
So, at the margin, I think whichever have done very well is where we would like to lighten up positions on. It's primarily been some amount of exposure which has done exceedingly well in terms of state-owned banks, especially in the last 3 months, where we've seen a significant rally in smaller state-owned banks. So that's one area where we would want to calibrate down our exposure. Similarly, if you were to look at some of the larger, well-run private sector banks, which have had a phenomenal run over the course of the last 4 or 5 years, that's again an area where we would want to tone down our exposure. Again, it doesn't mean that we are exiting or we are completely going underweight. It is some form of profit booking that we are taking down to reduce our overweights in that overall space that we are there. On NBFCs, we don't have too much of an exposure. We've been a bit more circumspect, and therefore we would be maintaining that stance out there as far as NBFCs is concerned. The area which hasn't actually worked out is on the insurance place. That's a space where we have some exposure, and over there, currently we are not really changing our stance as far as those holdings are concerned.
All right, waiting in on insurance. Thanks very much, Harish. It's always a pleasure. Thank you very much for joining us here on Closing Bell on CNBC-TV18. By the way, the market's made a big recovery. We're down only 60 points, which means that from the time that we started at 230, it's about a 40-odd point bounce that we've seen. And it's very visible up there on the screen. Let's have the Nifty Bank as well. It's a green candle, by the way, on the Nifty, which means that we're back above where we started on the Nifty. Nifty Bank is also recovering, although not quite to the same degree, maybe 0.4% lower. That's a 190 point cut on the Nifty Bank. And the mid and the small cap parts of the market, which of course were doing worse off, there is a recovery there as well. Especially the mid cap index is coming up nicely as we get into the last 30 minutes of trade. Small caps as well. So across the board, I mean, I think there is a little bit of recovery which seems to be setting in. On the NSE, if you want to look at the market breadth, there are about 200 stocks which separate gainers and losers. I mean, actually, it's not that much. Okay, and that's the number up on your screen. Now, the RBI's Monetary Policy Committee will announce its policy decision tomorrow. Lata is here with an editor's take on what to expect from the policy and the governor's speech. Lata.
The market has fully discounted a 35 basis hike from the Reserve Bank. Until last week, there was a hope of 25 basis, or rather even a majority. But after the non-farm payrolls came in higher than expected, and the dollar went up and yields went up in the US, the market has moved towards a 35 basis expectation. The real disagreement is over what will the stance be. The current stance is withdrawal of accommodation, which means we are in hiking mode. We are removing the easy policy. Now, if they change it to neutral, that will mean that we have hiked enough, and now we may hike or cut or pause. The RBI may not want to sound that dovish when things are still uncertain, when we don't know what will be the terminal rate in the US. Expected that the Fed could be in hiking mode for longer and stay high for a very long time. Therefore, the expectation in the market is that they will retain the withdrawal of accommodation stance and say that we will henceforth be entirely data dependent. So some tweak to that sentence, either in the policy statement itself or in the press conference, is what is expected. But just one doubt, there are two external members in the MPC, Jayant Verma and Ashima Goel, who are sounding very dovish in last time's minutes. So to placate them, whether a 25 basis will come or whether it will be a divided vote is one doubt that the market has. But if it is 25, there is a rally in the bond market.
Okay, all right, Lata, thanks a lot for that. We'll know in the next 24 hours or so. For the time being, we'll slip into a short break. On the other side, Nimish is waiting for us. He'll tell us what's going on in dealing rooms. We'll also get in our technical experts. They'll tell us what are their big calls.
Wishing CNBC-TV18 a very happy birthday. CNBC has been at the forefront of providing business views and analysis for last 2 decades. I expect them to continue to do this good work. wishing them all the best in their journey ahead.
Welcome back. Well, as we speak, we've had a bit of a recovery from the low point of the day, but let's understand better in terms of what's going on in the dealing rooms. Nimesh is with us. As promised, he's going to tell us what's happening in D Street chatter. Nimesh, what are you picking up? How are the flows?
Well, Nigel, it looks like the consolidation phase continues. Ever since we saw the big breakout in the Nifty at near all-time highs, since then we're seeing a bit of consolidation, a bit of profit booking as well. So that's been the trend today as well. In terms of flows, again, the feedback is selling in large caps, but the mid caps are well bid. That's the overall feedback. So again, a day when there is selective buying in the mid cap and even in the small cap stocks from the larger institutions. That's the overall feedback. I guess there is going to be a market at close, basket at a leading FI desk. It's going to be a mixed basket, so selling and buying both, but that will push the volumes higher. That's the overall feedback, that the volumes again in today's trade is going to be on the higher side. I think the sector which is well bid is the PSU bank stocks. Every now and then, you keep hearing about buying interest back in the PSU bank basket, and that seems to be the trend today as well. Coincidentally, today there was a Morgan Stanley report as well, where they have raised a target price and earnings multiple across all the PSU bank stocks. So that's the space where there is periodic buying coming back from larger institutions, is the PSU bank stock. The other sector which is well bid today is the cement names. Again, no specific reason. Maybe there is a anticipation or hope in the market that maybe prices will go up or the volumes are going to be higher, and maybe that's the reason why some bit of selective buying is back in the cement stocks. But broadly, from a Nifty point of view, it's again in a consolidation range, but there is buying selectively into mid cap and small caps.
Okay, all right. So interesting. Some sectors are well bid, but what about individual stocks? What are you picking up?
Okay, so in terms of individual names, the first stock is IRCTC. The stock is sharply down intraday, under pressure in today's trade, and now there is a fear in the market that maybe you'll see a large block or offer for sale from the government very soon. So that's the reason why that stock is under pressure today. The second stock is Coal India. I spoke about a basket at a leading FI desk. Coal India is part of that basket where there is a buying interest at a leading FI desk towards the end of close. So maybe the volumes will be in the higher side in Coal India in today's trade. The third stock is Precall. Again, that stock is buzzing in trade today, but at least in the last month or so, it's been consolidating. But now there is a strong buzz or indication that maybe a large corporate development is expected in Precall very soon. And hence that stock is in focus today. And the last stock is Craftsman Auto. There was a large block deal, 5% equity had changed hands. And I believe in terms of seller, a leading private equity investor was a seller in today's block, and at the same time, a leading domestic AIF was a buyer in today's block. So the disclosures will be important, but there was a significant 5% equity changing hands in Craftsman's Auto today.
Nimesh, thank you very much for that. By the way, there's been a pickup in the markets. The Nifty's climbed to levels of 1860. The cut has been narrowed down a bit. We were down close to about 70, 80 points. Now the cut is whittled down to 50 points. It's also the weekly bank, Nifty expiry. So that perhaps is contributing to the up move that we are seeing. Axis Bank pulled that up for you. That's higher. HDFC Limited is up close to about 0.3%. But even a couple of the other names, not banks, but Power Grid, Grasim, these are stocks which are pushing higher. Some of the IT names like HCL Technology, ONGC too has trimmed some of its losses. So there has been that bit of a pickup that we're seeing in the market. Mitesh, what would you attribute to this recovery that we're seeing in the last 10 minutes in any trade?
See, my understanding is that the market isn't falling, but it's more of consolidating. So I think, after 3-4 days of pullback, you will get these intraday throwbacks. But I think the directional bias has taken kind of a halt on the long side. And the idea is that once you get closer to medium-term support areas of 18,500, that's the time to buy. Otherwise, wait for this consolidation to get over, and then we'll see continuation on the upside. So in that sense, just holding our horses. Bajaj Auto is something, which is breaking out nicely on the hourly and the 2-hourly chart. So that's a BTST. Keep a stop below levels of 36.75, look for targets of 37.20. While Biocon is something which is on the negative side, that's STBT with a stop at about 277.5 for targets of 267, 268.
Okay, thank you very much for that. Jay Bala of cashthechaos.com is also with us on the show now. Jay, what's the read looking like on the markets now? We've been at these high elevated levels for the last couple of days, unable to punch higher and move towards that 19,000 mark, but we're not giving up ground as well.
Yeah, thanks for having me on the show, Rima. See, the markets are poised at such a point that we have possibly, seen a major top from the June lows. This is not something new that I'm saying. I had said this on the 2nd of August, that if the market could exceed the all-time high registered in October 2021 and then start to decline and continue the correction that started in October 21. Right now, we need further evidence for the market from the market itself that it's already topped. But if you look at cross assets, or if you look at other equity markets in the world, like the DAX or the S&P, even there are growing evidence that we have seen a complete move from the June low. So watch out, be cautious. If significant supports break, this could be a start of a significant downturn.
What would those markers be for you, Jay, afternoon?
Sorry, say that again.
What would those markers be? You said if, those levels break. What are those levels?
Yeah, the near-term 18,420 support on the Nifty is pretty important. But 18,130 would probably be a complete trend reversal for me. But we need to assess as the markets go down to those levels. We wanted to do it in a particular fashion, but just on pure levels basis, look at 18,130 as the very important trend shift level.
Hi Jay, good afternoon. Jay, on autos, I think you had briefly mentioned the last time as well, you're getting a sense that things are topping out there. Levels on the index?
Yeah, it's struggling to move ahead, but it's not breaking support. Usually that kind of price action would lead to markets falling on its own weight. Right now, the significant level for the auto index is about 12,600 to 400. If the index goes below those levels, I think we are in for a sizable correction for the auto sector. But if you look at tire stocks, they might still have a little bit of upside left in the short term, but it's not a fresh long. If you're already long in MRF, Seat or JK Tire, you want to hold on with trailing stops. But if the index were to break 12,600, I think we need to get out and book profits even as investors.
Okay, let's get to some trades then. Pidilite and Wipro. What is the chart telling you? Can you read them for us?
Yeah, Pidilite, if you look at the short-term charts, the recent high registered somewhere about 2,900 doesn't seem like a complete high. It's starting to inch up from 2550, and it's pushing somewhere close to probably 3050 to 3100. But since the market is poisoned in a way that I mentioned just before, I want to be a little more conservative and think it's heading somewhere close to 3000 with a stop below 2545. Wipro, surprisingly, it's been very weak among the IT plays. I've been bullish on mid-cap IT, but this has been underperforming even compared to Infosys, TCS, and HCL Tech. And it's looked like it's completed a short-term correction and turning down for extreme short-term moves somewhere close to 375. So, a stop above 420 would make sense for a price objective close to 376.
Okay, there is Pidilite and Wipro, and those are some trades from Jay. Jay, the other is FMCG as a space, right? And I think you think there the uptrend is still intact?
Yeah, that's right. Probably, the market is sensing it's trying to get into a defensive play. Although it's fatigued, but ITC is probably completed a move, but probably there'll be a resistance to let it go down, and it might push higher. But as long as the index stays above 42.5K, it's trending up. And there is the strongest stock for me is Britannia, and it's still got a little more upsides left to complete on the to form a top.
Okay, all right. Jay, what about the other two big global indicators? One is Brent and one is the dollar index. Now, Brent went to more than $100 and it's corrected to the low 80s, while the dollar index from 115, it's come to 105. Where are they headed?
Yeah, see, let's take the dollar index first. The dollar index is, in a correction to the move. It started from January 2021, and usually around the beginning of the year, the dollars, or most of the currency market starts to show where they are actually heading. So this looks like a correction to me. And if the dollar index goes above 108, I would think the short-term correction is done and the next leg up has started. Until that, be a little more neutral. But from a medium to long-term perspective, I'm bullish on the dollar index. When it comes to Brent, there are two possibilities here. One is a bearish possibility, another one is a short-term bump up. But the medium term is down. if the markets, if Brent were to break below 80, it will be a bearish fall, probably propelled by a fall in the equity markets and demand destruction. This is probably a deflationary scenario, but I don't know if this is going to play out. But in my sense is that if it will probably bounce somewhere close to 92, and then we can take a call beyond that. I would sense the market is actually pushing Brent somewhere close to 102 before it starts the next leg down for the medium term.
Jay, what about IT? The 52-week low on Nifty IT was hit sometime in September. And after that, this index and individual stocks and the constituents have been on a one-way recovery. The Nifty IT index has recovered close to about 16-17% from its 52-week highs, and it is making higher tops. Do you think this recovery can extend itself for some more time?
Yeah, I'm waiting for the markets to show its hand. It can be interpreted both ways, whether the July low or the September low that it registered, which are pretty close to each other. Is it a medium-term bottom or is it a short-term bottom? There are both possible interpretation. We need markets to show its hand the next couple of sessions. But I've been bullish on select mid-cap names like Persistent, Coforge, Sasken. You might want to take profits in those stocks at current levels. In the event that what we saw from July to December is just a short-term move, we don't want to be caught holding the bag.
The other one which has moved quite sharply is the dollar rupee. I think the rupee lost some 40 paise yesterday. It's, I think, down. The dollar is up some, I think, 70 paise. That's a big move that we're seeing on the, look at that. It's gone almost completely unnoticed. It's a full 1% move on the dollar rupee today after what we saw yesterday. That's a 80 paise move. We're back at 82.62 despite this massive fall in oil that we've seen. Right? That is, what do you make of it briefly, Bala?
Yeah, see, I had put out a note, a tweet on November 8th that the dollar USD pair is actually likely to bottom around 80.5, and it did exactly 80.5, and it's actually starting to push towards 87. So the recent 83.5 highs that we saw, that's very likely to go. Great probability here, but it's not going to stop there. We're going to probably see 87 and plus. So I don't know if it's going to be because there could be a stock market decline that leads to a weaker rupee. But the structure is such that the next leg of the weakness for the rupee has set in.
Okay, next leg for the rupee has set in 82.6 against the dollar now. Need to get into a very short break. We'll come back with the market closing rates and some more market talk.
It's a paradox that how can someone be so young at 23 and be part of India's story for such a long time? Congratulations. It's a wonderful day to celebrate our 23rd anniversary. And more importantly, to show to people how as you grow older, you still keep ahead of everybody who's younger than you. All the best. God bless.
Well, the Nifty has pulled back considerably, but it's ignored the rupee move today. And the rupee weakness is a little bit worrying. The way it's fallen, the manner in which it's fallen is a little bit worrying. Stocks that are doing well, we have quite a few. TVS Motors has spiked to the high point of the day, so keep an eye on that one. Jubilant Food as well has done pretty well, so that stock has spiked up in the last few minutes or so. But one notable mover in the last 90 minutes is JSL Stainless. There's a large trade that did take place. I understand there are fairly influential names that have got in. So we'll get the names by the evening, but that explains why the stock is up close to around 11%. Mitesh, JSL Stainless, we're waiting for details on that name. But on the charts, how's it looking? I recall it went to around 225 odd, then it corrected all the way to around 130. Your take?
That's Jindal Steel, no?
Yeah, JSL Stainless, the 199 rupees stock, 198 odd.
Right, I get that. That's given a big breakout win, Nigel. I think, strong price and volume action over here. The highs which the stock had made sometime in early of 2022 was around 216, 217 on the closing basis, weekly basis, while intraday high was around 219. So I think there's mild, pivot level over there. But looking at the indicator structure, I think once it kind of manages to get past that, I think 250 should be the minimum target the stock can do.
That's a big one. Thanks very much, Mitesh, for that quick take. Appreciate you joining in with that. We're going to end with a 60-point cut, which means that from the lows, we are going to be off about 60 points as well. So that's the extent of the pullback that we saw, especially in the last 30 minutes of trade. So banks also, I think, saw a similar amount of pullback. Mid caps and small caps, well, they end lower, but off the lows by quite a bit. Market breadth a little negative. IT was weak. Actually, metals, the entire global, the pharma is the other one. There's three areas where we saw weakness: IT, pharma, and metals. And these were the top losers. PSU banks, I mean, the big one did not participate. SBI did not participate at all, but you had the PSU bank index, which was up 1.25% by close today. So that's some of what happened in terms of broadly the markets today. Broader markets, Reema.
Well, largely a sour mood. The mid-cap index was down close to about 0.5%. The focus has shifted to the central bank action. Tomorrow we'll get the RBI monetary policy. The mid-cap index, outside of the indices, the mid-cap index was down 0.5%. The advanced decline ratio at 2 in the green for 3 in the red. It's all about the PSU stocks. So Punjab and Sindh Bank, IDBI Bank, J&K Bank, Union Bank, a couple of the other financials like Equitas Small Finance Bank, Higher and Trade, Bank of India, where Morgan Stanley raised the target price to, I think, 125, was up and about in trade. Jindal Stainless, a stock that Nigel highlighted, sparked up towards the end, a gain of close to about 13%. On the losing side, commodity names sold off. So Nalco's sale under pressure. You also had cuts coming in on Easy Trip, a big fall of 8%. The stock has had a fantastic run-up, but now it's coming in for some amount of weakness. 8% gone on Easy Trip. But all in all, it turned out to be a weak session for our markets, weighed down by profit booking that we saw across the global indices. The Nifty ends with a cut of 0.3%, the mid-cap index down 0.5%, and now it's going to be over to the RBI tomorrow. With that, it's a wrap and closing bell, but don't go anywhere. Our Tuesday special Commodity Champion comes up next.